Bill, sun not even up there yet, but I'm sure there is a bright glow emanating from 20th and C Streets in Washington that you can see from there.
Well, I think so, and I'm glued to 6 of my Bloombergs, and they're all telling the same story, that it's almost 100% that the yellow light changes in December to bright green. Before going to bed last night, I calculated that any jobs number over 150,000 would be sufficient. And I think importantly because the Fed views the economy and future inflation through a Taylor rule and a Phillips curve lens that speaks to low unemployment and a new NAIRU that is somewhere around 5.25%, which is now
right
below that at 5, and so I think they're ready to go.
Bill, they recalibrate. What are they waiting for? Why not have a special meeting and say this was extraordinary and get out front and provide the leadership that the market's desiring?
Well, because that's not the nature of the current Fed. I think we would agree with that, Tom. They're gradual, and they want to make sure that the markets are prepared. And unlike Volcker, who at one point in the late 1970s shocked the market with a 2% increase before telling anybody, I don't think that's the nature of this Fed. So, but I think the market obviously is anticipating, a rather quick increase of 25 basis points, as evidenced by the rise in the 2-year to 91 basis points.
I want Mike McKee to get back to the jobs report, Bill Gross, but I believe this is yields higher, bond prices down. How do you adjust in an unconstrained manner this morning?
Well, hopefully you go into it as we did at Janus with a negative duration. That's the nature of unconstrained, and the beauty of it to prepare for a mild bear market, I suppose, or certainly a down day in prices like today. And so, early this week, negative durations, going short the 30-year Treasury as opposed to long, and obviously making money at the moment.